Good morning, everybody. Happy Sunday. Welcome to the channel, Shelly's Millions, where we talk about money, finance, and budget. I also work in a movie theater, so we usually go over the top 5 or so movies for the weekend. Today, I want to talk about the increase in homeowners insurance rates after the fires. I kind of was thinking that, the fires were so devastating this year that hi, Michael, that I thought there can't be any way that we're not all affected by this. I have worries, they're not founded in fact, that those insurance agents aren't potentially gonna be able to insure those areas at all if they rebuild. I don't think anything about them being a fire hazard has changed. So, how do they, insure it? Thanks, Sean. Yeah, you guys might hear I'm still a little sick. I got sick last weekend, um, and I'm still recovering. I feel fine, but I still don't, sound 100%. I may have to blow my nose at some point during this live. Anyway, so I have been worried that the insurance rates are gonna go up here in California. I just kinda didn't see how they couldn't. And then last year, if you guys were watching, right around this time, we were talking about the homeowners insurance rates. And what happened last year in 2024 is for people that owned a home, a lot of us, I'm just gonna speak from my experience, right? This is what happened to me, is I got a letter. It said that the person who had carried my insurance since I bought this house back in 2011, 2012, they just weren't gonna insure in the state of California anymore. Good morning, Rocky. Good morning, Pinky. So out of nowhere, I got a letter that said I am going to not have insurance through the person who had insured my house since the day I bought it. And my insurance, it creeped up a little bit. I want to say when I first bought the house, it was like 586. And then through the years, it increased maybe to like 686 or something. It went up like $100 over 10 years, right? Which is normal. Then last year, and these are still not bad rates, but my house is really little. Like I have to imagine that most people probably pay a lot more than me in homeowners insurance. So if it went up the same percentage, it would be problematic. So last year, out of the blue, got a letter that said we're not insuring your house anymore. And I kind of scrambled trying to find places. But a lot of people also, I think I was with a company called Berkshire Hathaway, which for some reason also seems like Warren Buffett's investing firm, whatever. I don't know. Maybe Warren Buffett's investing firm also did insurance and then they got out of insurance in the state of California. I don't know. Maybe I have the name wrong. Honestly, I didn't pay close attention to it. I got it every year. I said, okay, this is what we pay, and it pays out of the escrow account. So it just kind of happens automatically. So last year, we got also California, like I didn't get a letter, but it was all in the news that State Farm, who's like a big insurer, is no longer writing insurance for new accounts. So I simultaneously got a letter that said, we're dropping your insurance out of the blue. And then I have the knowledge that one of the biggest insurers around just isn't going to be insuring property anymore. This video might live to bite me. I'm not sure. That's okay. I'm going to be honest. I have what's called a flat roof. And I don't know if the insurance agent knows that. Like it seems like some of the details in my policy are not quite right. But like they've been to the house, they take pictures, so I don't know. But I thought I was going to maybe have to go through the FAIR plan to get insurance. I didn't end up having to do that. But a lot of the people that I know now that are doing that, okay, well, not that I know one person that's having trouble with that. They want them to totally replace their roof before they can get insurance through the FAIR plan. And on their property, which is a big property, that's going to be a big cost. Additionally, with the FAIR plan, what I was reading about with the Palisades fires and the Eaton Canyon fires is that When because this happened, it wasn't just me, even though I'm only speaking about my experience, this happened to lots of people. They got notices that their insurance was being canceled and State Farm wasn't writing new policies. And I was starting to talk about my flat roof. In the past, like I've called Geico, who does my home insurance or my car insurance, right? It's Warren Buffett and Berkshire Hathaway. I could swear that's who did my homeowner's insurance. I can actually maybe check. I think I have the old insurance paperwork in here, and maybe I'll file away the new one. So a lot of people got these notices that their insurance was just going to be canceled. But the FAIR plan wants them to do a lot of work. So, for example, this is just one example that I read about. An insurance company in the FAIR plan, which does insurance if no one else will insure your house, like if it's so bad that no one will insure your house, the FAIR plan is supposed to provide that insurance. But in order for them to provide the insurance, this house that I read about in the Pacific Palisades, it wanted them to like cut down 10 trees that were surrounding the property. Now, sometimes those trees can be like $3,000 to totally remove the tree. Like if I had and 3,000, let's say it's $3,000 to remove this tree, and I have 10 trees that they want to remove. That's $30,000. If I had $30,000 to like remove trees, do I really like need, like then I have money, like do I really need insurance? Like I don't know. Right? Of course you need insurance. But then when I reinsure, so okay, fast forward to my situation. I get insurance through somebody called Bamboo. My old insurance agent found it for me. And I'm just going to pull this one page, right? This one page, and I'm going to read it to you. I wish I had I need to take a picture and screenshot it for you guys, because this says, important notice, the insurance policy that you have purchased is being issued by an insurer that is not licensed by the state of California. These companies are called non-admitted or surplus line insurers. The insurer is not subject to the financial solvency, regulation, and enforcement that apply to California licensed insurers. Okay. The insurer does not participate in any of the insurance guarantee funds created by California law. Therefore, these funds will not pay your claims or protect your assets if the insurer becomes insolvent and is unable to make payments as promised. The insurer should be licensed either as a foreign insurer in another state in the United States or as a non-United States alien insurer. You should ask questions of your insurance agent, broker, or surplus line broker, or contact the California Department of Insurance at the toll-free number 1-800-927-4357 or the internet website www.insurance.ca.gov. Ask whether or not the insurance is licensed as a foreign or non-United States alien insurer for additional information about the insurer. You may also visit the NAIC's internet website at naic.org. The NAIC stands for the National Association of Insurance Commissioners. It's the regulatory support organization created and governed by the chief insurance regulators in the United States. Foreign insurers should be licensed by a state in the United States, and you can contact that state's Department of Insurance. So correct me if I'm wrong. And this paper, by the way, is buried like several pages in, right? It's buried after they tell you how much your insurance is going to be. But I am pretty sure that this means that the policy is not worth the piece of paper that it's written on. That's what I think, right? The insurer does not participate in any of the insurance guarantee funds created by California law. Therefore, these funds will not pay your claims or protect your assets if the insurer becomes insolvent and is unable to make payments as promised. That's what the thing is, like with those fires, they're even saying that people insured by the FAIR plan are probably not going to be covered. let's even say I have $5 billion. I'm an insurance company. I have $5 billion like in reserves and cash or whatever. So, if you're insured, but then you are in one of these massive fire areas, how is the insurance company going to pay for it? Like, that's a piece I'm not able to connect the dots, right? And my mom used to sell insurance a long time ago. And this is what she had said to me. She said that, totally get what you're saying, Pinky. I will put your comment up right now. So my mom used to sell insurance, and what my mom said to me was the insurance companies, they're hoping that you don't need them, right? My insurance policy isn't very much, but it went up from about 686 to last year it went up to where's the rate? It went up to $1,403 and $3. And even then, the insurance limit, I'm not sure would be enough to like rebuild my house. So last year, my insurance was $1,403. This year, that premium is going up to $1,976. So mine is and then it's interesting too because it says coverage. So weird. The coverage is $1,641, but then I'm being charged $335.93 in fees. And the fees are policy fee is $150, a broker fee is $125. Then there's a stamping fee of $3.45. So I don't know. So here's what I think, right? This insurance would potentially be good if my house and my house alone was on fire and needed to be covered. I think that even though like I wouldn't want that, right? Nobody wants that. But I think that if it was just my house in my neighborhood, that there's a chance that this insurance company would pay out. But that piece of paper that I just shared with you guys basically says that, hey, if your whole neighborhood goes up in flames and we're insuring the whole neighborhood and we have a lot of claims to pay out, we're going to become insolvent and we're not going to be able to pay your insurance on your house. And we're just going to fold and we're not going to pay your claim. So back to this example. So in my case, I got a letter that my old insurance was no longer going to insure in California at all, and they were just dropping me. State Farm wouldn't cover me. I know that Geico won't cover me because of the type of roof that I have on my house, right? I didn't have to do the FAIR plan. The FAIR plan is supposed to only be if you're unable to find any other insurance that will cover you. But here comes Bamboo. I'm going to put them on blast. Bamboo is the name of the insurance policy that I'm with now that I don't think is worth the paper it's written on. I might not think that, like, if there was a small fire, that it did cover. But if my neighborhood was in an area that was massively destroyed by fire, like the Palisades or the Eaton Canyon fire, this policy, it would become insolvent. I don't see how it wouldn't. And then all the verbiage says that they don't have to pay. Okay, let's see if my home insurance stuff is in here. Taxes. I might have thrown it out because that car insurance for that file is empty. My Prius financing. What are you? What is this? So the California semi property something or other. Very organized, guys. I might not have kept that because, like I said, I'm no longer with that insurance company. I was trying to figure out the name of the old insurance company I was with, which for some reason I feel like was Berkshire Hathaway. Wells Fargo. This is more home stuff, home stuff, home stuff. Anyway, what I am worried about, here's my title to my house. What I'm worried about is that people just aren't going to be able to be insured, or that they're going to choose not to be insured. I understand why that man that I read about in the Palisades, who before he would be insured by the FAIR plan, was going to have to cut down these trees, and the trees were going to be more money than he had to get rid of in order for the FAIR plan to cover him. So it's not just like, hey, if no other insurance company will cover you, the FAIR plan will. It's like, if no other insurance plan will cover you, the FAIR plan might, if you make the needed changes to your property that they require. So for example, my house with the flat roof that Geico will not insure, maybe I'd have to change my roof before I could find insurance, or before I could get insured by the FAIR plan if that's what I needed to be insured by. So I don't know. And I don't know why a flat roof is harder to insure. I don't know if it's more likely to catch fire. I don't know if I feel like it's less likely that the rainwater is going to drain off, but I don't know. I haven't had problems with that. Knock on my glasses desk. Oh, this thing's wood. Knock on wood. Boop, boop. I don't know. So yeah. So at any rate, my insurance has gone up from $1,400 last year to $1,900 this year. But at least my insurance company is still valid, because I worry about what this is also going to do to the price of homes. And I guess I should look up what they're doing in Florida. Maybe we'll do that a little bit later in this live, because I'm told that people in Florida are having a similar issue. Like, your house, it just isn't going to be bought by, it's not going to be insurable. So here's this loop, right? In order to buy a house, the bank, right? Because you're going to mortgage your house for the most part. So I'm a person, I want to buy my house. But in order to buy the house, the bank requires that I have insurance. But I can't get insurance because no one will insure, because I'm in a dangerous area where it's high risk. So the bank won't finance my loan without that insurance. So now I can't buy the house. And I know that a lot of people from out of states, they look at California and they say to the people who weren't insured, well, you knew, let's also address that statement too. You knew you were in an earthquake zone. You knew you were in a fire zone. You knew you were in a flood zone, right? Practically all of California is near a fault line. When I bought my house, I wasn't thinking, right? Even now that I know this, I'm not like, oh my God, I should sell my house and find something else, right? You're taking a calculated risk, right? So I know that I'm not too far from a fault line. When I bought the house, I was in a flood zone, but they've redrawn the flood zone and I'm not in a flood zone anymore. So when I first had the house, I had to also carry flood insurance. I don't now. And as soon as I was able to drop that flood insurance, I did, because it was like an extra, I want to say $127 a month that I can't really afford. And they've now redrawn the line, saying it's so unlikely that there would be a flood that I don't even have to carry the insurance anymore. So I'm not. Could this area still flood? Yes. Would it be really unlikely? Yes. But I understand, when I was looking at this house, I wasn't thinking, how close is that house to a fault line? Maybe some people do. Probably people with kids. Maybe they look at this, the safety, the flood zone. I know they look at the schools. But I didn't, right? I was like, what is the cheapest house that I can afford? Because that's all I can, I know. That's interesting. Oh, Cindy, thank you so much for sharing that. More problems with flat roofs. Yeah, so I have heard about that for when it rains. And when I bought this house, I actually got $5,000 off. So Cindy's saying about flat roofs, which is what I have. Flat roofs are more likely to leak when it rains. There are more problems with flat roofs. Her husband is an architect and he never wants a flat roofed house. I think an architect, first of all, is a really cool job. That's something that I've always been interested in. I don't know if I would be good at it, but like I love the concept, right? Of making the plans and the support beams and like what needs to go where, like logistically and just all those things, and like making it nice and beautiful. Um, so yeah, when I bought my house, I could actually in the living room, you can see some water damage starting to come through. And I had to have my roof replaced but still to another flat roof before the bank would even finance my loan on this house. The roofer that redid my roof, I hope that I mean, I guess they were really good because it's been about 12 years now. When they redid my roof, they said that they peeled off, right? Because I guess it's common, you just keep laying like that. I don't know, it's like paper, but it's also like tar. I'm just gonna call it tar paper, and it's like big rolls of these like tar paper stuff, and they just unroll it onto your roof, and then they like use, I don't know, it looks like a glue paste to paste the seams together. I don't know. I don't know what they did up there, but so like it's common that if it leaks that you just put a new layer on kind of and then patch around it. So when they did my roof, I replaced the whole thing. I think it only cost about $2,000 back then. But they said that they peeled off 8 layers of old roofing because they just, when they replace it, they just keep putting it on and on and on. I guess that's not good. So, but they peeled it all off. I remember being mad about it too at the time because I guess there's rat poop up in my roof. I don't know how to say that nicely, so there just is. Um, there's rat poop up in my roof, and I wish they would have told me, like, when the roof was off, like, "Hey, lady, you should really address all this rat poop up here," because, like, I don't know, I feel like you could just go up with, like, a shop vac and a mask because I think rat poop is toxic. Look, I don't know. My house is a mess, and I knew that my house is a mess when I bought it, but this is the house I could afford. And I think that's what a lot of people do. Like, people, they sell you the American dream so hard, right? And I sell that on YouTube. I'm like, "Yeah, everybody can buy a house." Maybe not the best house, maybe a house with rat poop in the ceiling that is, like, literally falling apart, that has 8 layers of old roofing they have to peel off. But they sell you that dream so hard that that's what you're looking for. You're looking for the cheapest house on the best block. That's like a common saying in real estate investing, or the ugliest house on the best block, but that house is going to have problems that maybe you're not thinking about, long-term problems like, oh, it's in a fire zone, or oh, it's right next to an earthquake fault, or oh, it's in a flood zone. And like with my house, and it's not entirely true that I didn't think about these things. Like when I dropped the flood insurance, they also have to give you a flood history report. I think, I'm not sure if that's just when you're required to get flood insurance or if that's always when you buy a new house, but it tells you how many times your property has flooded in the last 100 years. And in the last 100 years, my house has flooded 0 times. So I'm going to look at that calculated risk and I'm going to say, well, we've had rain and we've had lots of rain in the last 100 years and my house has never flooded. And actually, I think my house is only 98 years. But since the house has been built, it's never had a serious flood. So am I going to carry flood insurance when it's that unlikely that my house would flood? No. And kind of the same, so maybe it was the same for this man in the Palisades that didn't go on the FAIR plan because he didn't have money to cut the 10 trees, right? And people that just like buying California in general. I think we're looking at price. Oh, that house matches my budget. That house looks nice. The house has been standing for 100 years with no floods, so it's probably not going to flood. And that's probably what happens in the fires. So I think they said the last fires were in that area were about in the like 1950s. There was a really bad fire in the Palisades. But that's 75 years ago now. So if I bought a house 5 years ago and I say, okay, well, I know I'm in a fire zone, but how long has it been since there's been a fire? Oh, not since 1950. And look how far technology has come, and look how many more fire stations we have. And all of these things, you rationalize why it's okay to buy in an area that could potentially still be problematic. And if so my insurance went from like 600 to now 1900, right? And that's still a big increase. But if my house was bigger and more expensive and more money to insure in the first place, like let's say that my insurance used to be $2,000 and now they were trying to raise it to 10,000, that would become an amount that I wouldn't be able to afford. And if you literally can't afford it, then what are you going to consider? Are you going to be like, "Oh, well, I can't afford insurance in my house, so I'm gonna sell my house and move"? Or are you gonna take a calculated risk? I'm legitimately asking. Or are you gonna take a calculated risk and say, "Well, I know I'm in a fire zone. I know I should have insurance on my house, but it's been 75 years since there's a fire in this area, a bad fire in this area. And I'm going to risk it, and I'm not going to put insurance on my house." Or I have to admit, I'm not even looking at it from like a fire risk standpoint, but I wonder if also once your house is paid off, you no longer have to carry the insurance on it. Okay. It's a bank requirement. I still, even with all of this, I still do think it's smart to have insurance. But if my neighborhood goes up, the company I am with, it really says the insured does not participate in any of the insurance guarantee funds created by California law. Therefore, these funds will not pay your claims or protect your assets if the insurer becomes insolvent and is unable to make payments as promised. It says that in real this is bold. Hold on. Let's see here. Cover up. This is the size print on the rest of the document. Oops. Okay. Sorry. Okay. That's the size print on the rest of the document. This is the size print on the notice that they could become insolvent and can't pay. So so in the case, like, if there was like an accidental fire and my house was the only one to go up, I do think that this insurance company would help me rebuild. But what are the chances of that, right? So, but if there was like a big fire where I live, like near the Palisades, this company, I don't see how they would not become insolvent and they would not be able to pay out my claim. It says that right there, big and bold, right? In a very differently sized font. So then do I want to keep paying $2,000 a year for insurance that I'm not sure is worth the price of the piece of paper it's written on? So you guys let me know. What would you do? And I also want to say that a lot of the states that are like, well, you knew you were in an earthquake zone, you knew you were in a fire zone, you knew you were in a flood zone. Some of them are in flood zones too. My friend, who I've done an interview with, he's a millionaire. He owns property in Louisiana. The houses are beautiful. They're lakefront. I want to say he's in Lake Charles, Louisiana. When he gets out there and there's damage to his properties, he goes and he fixes them himself, right? Because he doesn't want to wait for the insurance. He's a good landlord. He gives people like $500 off their rent at Christmas and things like that. And during the pandemic, he lowered people's rent. He is not like a greedy millionaire. He's like a good guy, But he builds in the Lake Charles area. And as far as I know, he's still building in the Lake Charles area. And it's like, well, come on. How many houses are you going to build that then there's damage? Like, why are people building in the areas where they see this happening? And what is the future of real estate? I think I have a theory, right? Again, I don't know. This is just my brain working, which doesn't always like I could be missing some of the data, right? I admit that. I don't know. But if I want to buy a house and I need insurance on the house to buy the house, but I can't find insurance to buy the house, so the bank won't give me a loan to buy the house, so I can't buy the house. A couple things could happen. Number one, the price of the house could drop because if no one can get insurance and no one can get loans, then no one's going to be able to buy the houses at the expensive rate. Thing number two, perhaps you could buy a house all cash. And if you bought a house all cash, then the bank wouldn't own the house, you would own the house, and you would not have to have insurance on that house if you chose not to. So in that case, I think that we're number one going to see a lot more all cash offers from people who just are not going have zero plans to actually insure the property. Who like if it burned to the ground, they could afford to just rebuild it because they're rich. Or I think that you're going to see the price of the houses come down so that more people can afford to buy them cash, or maybe like so that you could afford to do like whatever crazy repairs are necessary to get insurance on the house, and or the prices of the house are going to come down so that you can afford like insurance and your mortgage payment. I don't know. Like if they just won't insure it, I don't know how we're going to do this without all cash. And if it's all cash, it's probably going to come down. I'm drinking orange juice today instead of coffee because I already had a cup of coffee before I came in here. So while I take this sip of orange juice, if you would like the video, I would really appreciate it. Okay. And the orange juice because I'm sick. Also, it's sugar-free orange juice. And it said it tastes great, but it does not taste great. It tastes more like Tang. And sometimes I like Tang, but it's not orange juice. Okay, so the insurance. Do you guys want to keep talking about that? Do you have theories? If I can't believe I didn't do this last week. Okay. So sometimes I'm back and forth about wanting to be a landlord, right? Because I also feel like I've really bought into that kind of rhetoric. I have bought into the rhetoric that like one of the ways to increase your wealth the fastest is to invest in property, invest in real estate. So I have my primary residence, but maybe I want to actually, because to get a better interest rate, maybe I'd want to buy a second house, rent this one out. I can't rent. This one's not in policy to rent this out. Hi, Steve. I haven't seen. Oh, interesting. Okay, let's see. Take the insurance policy to the bank and they will take care of the issue. They will not let the insurance company insure like this. Yeah, so wait, you mean with this weird letter that I have? Did you see the letter that my insurance company has, or they're not going to let because I think also let me also say that that's probably a possibility. Okay, so again, the letter that I have says this isn't worth the piece of paper it's written on. The insured does not participate in any of the insurance guarantee funds created by California law. Therefore, these funds will not pay your claims or protect your assets if the insurer becomes insolvent and is unable to make payments. But my house is still in escrow. So that means like my bank is familiar with this company. And then basically there's instructions not for the bank, but for me. The insurer should be licensed. Blah, 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 blah. You, meaning me, I should ask questions of my insurance agent, broker, or surplus line broker, or contact the California Department of Insurance at this toll-free number. Or I can go to this website and ask questions. The thing is, I'm going to be honest. I'm not too, knock on wood again. Hold on. Knock on wood. I'm not too worried about a big, huge fire coming and taking out my entire neighborhood. It's not that I don't think it can happen. It's that I think even though that my insurance company says it plain as day, in really big print, as opposed to the really small print for the rest of this letter. I think that most insurance companies are going to be insolvent in the case of like a big fire. We're already reading about that in the Palisades fire. Even the people that are under that FAIR plan, they're not. I just don't know if the insurance companies are actually going to pay, right? So I think that even though my insurance company says it nice and big and bold, I just don't know if any insurance company is actually going to pay in case of that. Yeah, and Steve's saying bank will not lose money. Yeah, yeah, that's the other adage, right? I don't know if I finished this thought. So my mom worked in insurance, and she said basically that they're hoping that nobody has a claim ever. And for the last I've owned my house 12 or 13 years now. 12 years, 10 years, 2011, 14 years. Can that be? I've owned my house for a while now. I'm getting close to paying it off. I took out a 15-year loan. So when I first started insuring the house, it was like $600, and now it is almost $2,000 a month. So luckily, my house is so little that even though it's gone up a lot, like almost 4 times, it's still affordable for me. But for someone else, it might not be affordable. So let's hypothetically say, let's just say that let's call it an average of $1,000 a year on my insurance. That means I've paid in $12,000 into insurance on this house. It's probably a little bit less, but we're just gonna say 1,000 times 12 years just for simplicity. So the theory is that I'm paying $12,000 a year for my house, and my neighbors are paying $12,000 a year. Uh, sorry, $12,000 total for their house over 12 years, and someone else down the street has the same insurance company, and they're paying $12,000. So now that insurance company has $30,000, and then one of our 3 houses catches fire, but the house doesn't burn down to the ground. It's like a regular fire. It's not like a whole community on fire. They're just, maybe like the corner of my house caught on fire, and my insurance company does have to pay $25,000 for repairs to the corner of my house that caught fire because I don't know, something other happened. But then all in all, the insurance company is still $6,000 in the pluses because of all the other houses that they insured that don't have problems. Like the insurance companies, they're hoping that you don't make a claim. Uh Premier Hell is paying $12,000 a year to rent. Yeah, that's crazy. Joey is saying California insurance is crazy or sad, or I'm not sure what that emoji is, but not great. Is cringe. It is cringe. Yeah. So, and I'm not paying $12,000 a month or a year or anything for rent. My whole mortgage, you guys, is $1,100. Sorry. Let me share that. So they like estimate your mortgage payment, and my mortgage payment used to be $1,100 a month. But starting actually this next month, it's going up to $1,400. And you're like, isn't that the point of the house, to have like a stable payment? Yes, my house payment's the same, but this escrow account where you're adding in the insurance, that's what's causing that jump. And so they tell you, like, if you have a shortage in your escrow account is, as long as the bank owns your property, they're like, you send them the money. The bank also wants to know, right? Let's put this company up. The bank will not lose money. Yeah. So while you're making payments on your house, that you have something that's called an escrow account, and you're sending money every month to the bank on top of your mortgage payment, which is just for the house and any taxes and things like that. You're sending money to the bank so that they know they don't want to risk you not being able to pay your insurance or your real estate taxes. So the escrow account holds the money for your homeowners insurance and for your property taxes. The bank is like, no, no, people, we're going to make sure that you pay your insurance and that you pay your taxes. So to ensure that, the bank's just like, we're just going to do it for you because we don't trust you. That's basically it, right? Like that's basically what they're saying. They're saying, no, no, people, like we see what you do with your credit cards. We don't trust you to pay your bills. So we'll just hold that money for you. And then when the bill comes, we'll pay it. But sometimes the bank has not asked you for enough money to put in that account. So they will look at they'll do like an escrow account analysis every year. And when they did mine this year, because of that jump in insurance cost, um, I have a shortage in my escrow account, and that's going to cause my monthly payment to go from $1,100 to $1,400. Now that's still affordable for me, but that's a big jump, $300 a month. And the idiots at the bank and the idiots at the insurance company, they're not together on this, right? They're not together on this. And so they did the escrow account analysis before I got this year's increase. So really, my monthly payment should be closer to $1,450 on my house than 1,400. Okay. Okay. Okay, Pinky says, "That's every insurance company on the planet, including health insurance, CP, panics. They want your money, plan your fears about what if, and fight you tooth and nail not to pay claims." Yeah. Hi, good morning, Bonnie. Okay. Premier says, "You need to be asleep to believe you don't rent everything you own." Oh, interesting. Interesting, interesting. So basically what you're saying is even though I'm owning my house. First of all, the bank still owns the house. And second of all, even when I own my house, we still have that escrow account that we're putting into. We still have you're renting, you own the land, but you have to pay the property taxes on it. Otherwise, the government can take it back, right? That's how people do like tax lien auctions and things like that. Okay. And then Joy and Joey says, "Yep, the banks are making interest off your escrow. Ain't that something?" Yeah, and that's why, like, I probably won't pay extra. Like, you can call the bank at any time. I have had this work in my favor before where for whatever reason they've overestimated, and my mortgage payment has gone down. I think it used to be like 1128, and then one time I had it go down as low as like 980 or something like that. So I've had it fluctuate, and I've had it fluctuate back down in my favor. But this year, because of how much the insurance went up again, I know it's not it's not fluctuating in my favor. Okay. And then Pinky says, "Doesn't the bank also keep on insurance on your house to benefit them?" I'm not sure about that. I do know that in the brief time when I got the letter last year in 2024 that said, "We're just not going to insure your house anymore." There was like a brief time while the while the new insurance was kicking in, where the bank kinda got noticed that, like, "Hey, we see that you don't have an insurance carrier." Like, I didn't go even 1 day without insurance, but they were like, "So we've picked for you, unless we hear from you within 30 days." But, like, the letters just crossed, and they did hear from the new insurance company, Bamboo, in 30 days. Okay, Steve says, "I have a 16-year-old roof." Um, in NW days nowadays, we have hail damage here in Wisconsin. If it has hail damage, they will not pay for hail damage due to the depreciation and a $2,500 hail deductible. So he'll pay for the roof. Yeah, so that's the thing. Like these insurance, so that's why people, once their house is paid off, once they, most of us are idiots. You would get along very well with my mom. I shouldn't laugh. Anyway, um, so yeah, like, anyway, that's why the insurance companies that's why a lot of people, because of things like this, They don't wanna actually pay you what it's worth. I think even now, my homeowner's insurance policy, it's not replacement cost, the $1,900. It's probably like what I bought the house for. I love my mom too. I have a video with my mom. I haven't seen you in here before, Premiere, so, um, if you haven't, you should watch my video with her on Social Security. It's really, really cute. Well, it's not cute, but, like, it's cute because I love my mom. It's, like, terrible. She lives with me now, but she didn't at the time of that video. So it's kind of interesting to see how we were living. Um but yeah, insurance companies are like, this is why people don't want to keep insurance on their house or why they would consider it because they're going to find every which way. They're going to fight you tooth and nail to not pay you what they owe you. Even in the case of the fires, when people were being told to evacuate, people were also being told, hey, go take pictures of your room that are current so that the insurance companies can know that, like, what you're claiming on the contents of your house you actually had. You wanna know something interesting? For me, at least, and again, we're gonna knock on wood that this does not happen, but thankfully, my YouTube channel, so if anybody's on the fence about starting a YouTube channel, maybe here's a reason to do it. I've shared everything with you guys. I've shared my messy closet. I have taken the computer and walked through the house. When I was downsizing, I showed you all the clothes. I sat in the living room and streamed a couple of times, and I have some toys behind me. Like I've shown like my streaming setup and all of that. So all of that, I could be like, well, you know what? I can do one better than pictures. Here's video, you effers. Um, so um one of the people in the Palisades that I was reading about, they're a musician and they like did a podcast and in a room with all their like one of a kind guitars on display or something like that. And it must be nice, but like, the insurance company, we're going to be like, well, did you really have those? Yes. And here's where I was on my podcast with all of that equipment in the back. But that's why people consider not insuring, because it's so hard to insure. Okay. Pinky says, when I owned my home, I always kept an excess amount in my escrow account because I didn't want my payment to increase. They'd send a check to me for the excess and I'd deposit it back plus more. However, where's this? Okay. That is a good strategy. And if that worked for you, that's great. The reason why I don't, and I just wait for them to tell me that I owe more is because of this comment that Joy and Joey's saying up here a little earlier. Yep, the banks are making interest off your escrow. Ain't that something? So I would rather have it the other way. I would rather keep that extra money in a high yield savings account until they say, hey, lady, we need that from you. I would rather be the one having my money in a high yield savings account, accruing interest, so that, I'm benefiting, not them. I'm 47. I'll be 48 this year. Okay. Okay, I do want to show you guys a house. Okay, so I started to talk about this earlier, and then I went back on the insurance rant. So this is going to tie into the insurance rant, though. So let me see if I can find this. We'll share my channel page for just 1 second. Snow White kitchen house for sale. How about that? Okay. Yep. No, not white kitchen, you weirdo. Okay. Where's this address? That's bad. I just saw the address. Where'd it go? Is this going to have the picture? As it stands, this is the house. It's for sale again. You guys can see some of these pictures. Gorgeous, gorgeous, cool house. Looks like a castle, right? A little Disney castle. Okay, hang on, hang on, hang on. I can't imagine that this wouldn't like Airbnb for like a lot of money, right? Dang it, where's this? Where's the actual listing? No, 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 not white. Okay. Snow White and the Seven Dwarfs, Cottage for Sale, Curved LA. It's from 2016. Dang it. This is definitely the house. Okay, let's try Redfin. Oh, okay. Remind me, 6937 Vanland. 6937 Vanland. 6937 Vanland. 6937 Vanland. Okay. It's under contract. Okay, but we're going to look at this house and we're going to talk about so one, I don't have the money for this house, but I really wanted to have it. Wasn't under contract when I was first looking at it. We're on Redfin. We're looking at a house that I was like, ooh, maybe I could buy this house and Airbnb it, right? I think you could Airbnb this for a lot of money. Apparently the kitchen supposedly inspired Snow White. Like, this is just a really cool house, and I cannot believe that this wouldn't Airbnb for a ton of money. But look at how cute this is. But I'm going to show the bathroom's weird, but we're not going to talk about that part. Okay, let's see here. Let me make sure that you guys are seeing what I'm seeing. Yes, you are. The house is cheap for the area that it is in. Okay. And when I say that, first of all, look how close this house is. Do you guys see when I move my mouse? You guys don't see. Okay. So I'm going to say this in the upper left-hand corner, look how close that house is to the house with the green shutters, right? And it looks like it's up on stilts that are maybe preventing it from falling into the house with the green. And I know I saw some other pictures that I will share with you guys. It's got a little lake. Okay, in this picture, kind of right above the rock wall, do you guys see above the rock wall, so above these blue chairs and above the rock wall, there's like some netting or weird fencing right there. And then in the corner of the netting, like between where the house, so like there's like a wood wall and then there's netting kind of underneath that green shrubbery. There's sandbags down there. So I bet that part of the reason why this house has been on the market and why it is so cheap, even though it's $1 million, but that's cheap for like the area, is because this place is probably having some structural issues, right? So that probably means it's going to need an all cash offer because it's probably next to impossible to insure this house. Yeah, but Pinky. Okay. So yes, this house is absolutely adorable. Yes, it's cheap for the neighborhood. You are 100% correct. Under contract doesn't mean the sale is complete. Until the sale is finalized, you still have a chance. I asked my real estate about it, right? I said, look at the sandbags though. I don't know how big the monitor you guys are on is, but if you get a chance, right, just for funsies, it's a very tiny pond. It's just supposed to be like nostalgic, but above that, and there's a right hand corner, there's like a ladder actually propped against the blue patio chairs that looks like it leads right up to sandbags. So there's that photo. the thing is, like, it is really oh, good, we've got a better photo of those sandbags, again, right above where that ladder is. And I mean, it's a totally cute house, right? I think you could Airbnb it for a lot of money. But are the other houses oh, look, and here's a good close up of that netting, right? Do you guys see that? Um so I think that that's why it's so cheap. Also, there's no parking. Apparently, there's literally but again, for Airbnb, you'd be renting it to, like, maybe Disney fanatics, maybe people for weddings, maybe people for a honeymoon. Um, I even asked so I went as far, guys, to ask my real estate agent. Let's see here. She loves me. She doesn't love me because I bought this house 12 years ago for pennies, and then I bug her all the time for other stuff. Okay. I said I said, "Could you look into this for me?" I said, "Are you able to make payments? Because I don't have that kind of cash sitting around." Um, she said, she said the private remarks on the property were street parking only and requires stairs to access. And then she says, the supplements are just the improvements and upgrades. Want me to email that page to you? And I said, yes, this seems like the perfect house to Airbnb. Sometimes there's also Airbnb restrictions, but she said that she's not aware of any Airbnb restrictions, but the city councilman's field office should know. So I think the no parking would be an issue, like if somebody in LA actually wanted to live there because we all have cars and we'd want to show off this cute little house. Um, but there's no parking. There's literally no parking. There's no street access to this house. And then I said, hold on one second. I said, hold on. Oh, she loves me. I said I Googled it and it looks like there's an erosion issue. I asked her if they're accepting all cash or is financing okay. And she said the fact that they want pre-approval says financing is okay and the listing doesn't say otherwise. And then I said, how does one take out the trash / get furniture in if cars can't go up? And she said very carefully, that's her official answer. Guys, I'm actually really I can't oh, I missed you guys. Anyway, this house is super cute, and I do think right, Pinky, but here's the thing. This is how we get got and we get caught in this insurance thing. Pinky, because Pinky, you're a sensible person. Everything about that property screams no for me. All I see is money hemorrhaging out. For someone with money to burn, they can have it. Yes. Oh, interesting. Okay. Yeah. Where do you put the trash cans if there's like no access on the parking? We're gonna read this listing because it is cute and this is something that when it came up, I think I saw like an article about it. And I was like, oh, that's cute. And then immediately though, for that area, it's like in the Hollywood Hills. So 1.2 million little shacks by where I live are practically selling for 1.2 million. So instantly I was like, well, what is wrong with this house? And it does look like there's erosion issues. And yeah, it probably is screaming no. Steve says you're also only allowed to go tour this house in person. So I bugged my real estate agent about this house. And then she said, we need to send pre-approval and proof of funds bank statements before my real estate agent would even be allowed to show the house. So I don't have that ready because I'm not seriously looking to buy anything right now. I was just curious what it would take to buy this. And we're going to do the whole math on this actually. Oh, we're at our hour mark. We're still probably going to look at this house because I love it. Steve says you should have a professional look at the retaining walls if you plan to buy it. It could cost $100,000 to fix it if it has problems or more because I don't know. And Pinky says, and again, I'm not seriously looking at buying this house. Like I looked at it, I was considering it enough that I thought appropriate use of my real estate agent's time. I bugger every once in a while with like these harebrained ideas. A professional should definitely inspect everything on this property. But sometimes you just want something so bad and you just buy it. Because, like, how much could you Airbnb this for? Also, are these trees about to fall into it? Let's keep looking at the pictures because it is really adorable. Like, I love that window. I love that gargoyle thing. Cute little outdoor dining area. The patio balcony, that looks sturdy, actually. It looks more sturdy than that little bridge. Again, it's a cute little nook, but is that secretly a aesthetic ladder going right up to those sandbags? I don't know. They got little gnomes in there. I love the green windows. I love that little area. The roof looks good. Let's look at the roof. Okay, guys. Honestly, it looks like the roof has probably been redone not too long ago. Is this double layer up here, that very top left corner? Is that a couple layers where maybe that spot's been fixed? I don't know. Also, how do roofers get up there to fix that? Don't know that either. Also, is this in a fire area? Because look at that brush, but look how cute that is. I really think you could Airbnb this for a lot of money. Okay. So now let's close this and let's read the details of the house. And we right here on Redfin, you can put in the estimates so that you can try and see how much this house would cost. Okay, so it's active under contract. It's $1,249,000, which would be $8,091 a month. I think that's with no money down. Where's the thing where you can estimate the price? Okay. So this is estimating, but see, look at that homeowner's insurance price, $333 a month. There's no way that's how much that insurance is going to be on that house in this state. Sounds like they want to get rid of that burden ASAP and don't want to waste time with unqualified potential buyers. Yeah, but I want to go look at it. But you're right. Yeah. And there's like all these TikTok trends where TikTokers go and like look at the house. Like maybe they don't want to do that. Okay. So it's saying with 20% down payment, 249,800, which I'm just going to go ahead and say, while I wouldn't do this. I'm not actually looking at doing this. If I were going to do this, I have zero money in my bank account right now. In my bank account, I have, I think, $400. I have $400 in my bank, guys, and I'm looking at a $1.2 million house. So if I were to get this house, I would have to refinance this house, like do a cash out refinance and use some money from this house towards the down payment of this property, and then still make those $8,091 per month payments. Plus, I bet though, I do not think, I think that's probably what the current person's paying for their, I also don't think property tax is right. Anyway, I don't think homeowners insurance, I don't think that's correct. I think it's going to be a lot more. Down payment assistance, mortgage rates, yada, yada. Okay, so let's just go with their estimates though. Let's say that this house was $8,091 a month. If you could rent it for, let's say, $4,000 a weekend, and I know that that's really high, but think about how cute that house is. Like people would want to live there. People would want to stay there on their vacations. Maybe you can't get $4,000 a weekend. I think the most I've ever seen for Airbnb would be like $1,100 a night. So we're going to go with that. Okay. So let's go 8091 times 12 times 12. My phone is dirty today. Would be your payments would be $97,092 a year. And then let's divide that by 1,100. So you would need to rent it 88 nights a year. And I think you can require that people book in like a 7-day increment. So let's divide 88. Let's go with 4. Let's say people get it for a 4-day weekend. Divide it by 4. So you would need to rent it less than half the weeks of the year in order to make profit on it at an Airbnb. But that's if those calculations are accurate. And that's without any, Airbnb cleaning fees or anything like that. And that's also if those estimates on rent and property tax are accurate, which I don't think they are. And that's if you can rent it for all those nights at that really high rate. I know Shelby Church. She's a YouTuber. I don't know her personally, but I know in her videos, she says that her Palm Springs house that they rent for Coachella, they rent for about $750 a night. And I think that she requires a 7-night minimum. So, okay, that was 88 nights total divided by, if you make them rent 7 times for 7 days, all 7 days of the week, then you would only need to, what just happened? 88 divided by 7. 13 weeks. You would need to rent it out 13 weeks out of the year. 13 out of 52 weeks. That's not that many. Anyway, okay. Steve says, I have done plaster and no cracks in the plaster is a red flag to me. Someone must have reworked the plaster. Oh, that's interesting. Yes, and we were talking about a laundromat. Oh, Cindy, I have an update on the laundromat though too. Okay, so do you remember me saying that my mom used to work for an insurance agent? Okay, so anyway, I'm not doing this house. I do think it has potential. I do think that that house is literally about to just crumble or erode away and not be worth anything. And I don't even know how you would rebuild there if you can't get cars up that road, if it's a no access road. Like, how do you get repair trucks and their materials up there? How do you even take the trash? How do you get a new couch up there? How do you get a new bed up there? Luckily, new beds now, a lot of times they're foam and they just come all rolled up and then they inflate once you let them out in your living room. But what if I want a new dining room table? Like, how do you get that up there if you cannot drive up there? So that's probably not the house for me. It's already under contract. It's probably crumbling into the ground. And if I would have to refinance my own house to even look at being able to potentially afford it, it's also not the house for me. But it is really cute. I do think it has a lot of Airbnb potential. I don't think it has a lot of potential to be insured. Oh, and it would not surprise me if this house actually fell out of escrow because of things like the insurance rates. Yeah, that is an option. Have the furniture built inside the house. Yeah, that's an option. Sometimes too, I've seen other properties like rent a crane. I don't have the money to like rent a crane and like airdrop a couch in there though, but like I have seen things like that happen. Okay, so Cindy, on the laundromat. My mom worked for an insurance agent and now we're friends on Facebook with him. He's like traveling the world on a cruise with his wife. It's super adorable. But I reached out to him and I asked him about owning the laundromat, and this is what he said. Okay. First of all, he said to tell my mom hi and that he hopes her health is okay. It is. It's pretty good. I know she has problems. She did. But she's pretty good. So take good care of her. I take mediocre care of her. I love her. I'm doing the best I can. He said, I did have one laundromat. It was okay, but in a very competitive area, Highland Park. My mom and I used to live in Highland Park. It's next to Pasadena and Eagle Rock and all those areas. We did well until other new ones opened and the business went down. People just want new ones. We bought an old one for $10,000, and this would have been, God, I was a kid. So I was a kid in the 80s. So this would have been back in the 80s. We bought an old one for $10,000 and remodeled it, costing $150,000. And again, that was back in the 80s or so. They require a lot of effort and time. You really have to stay on top of cleaning and money collections. I have no, oh, perfect. He tells me what year it is. I have no idea what they're selling for today. This was 1987. We sold it after a couple of years. I made money, but with a lot of effort. So he seems like he was like, he doesn't exactly, he has 2 kids, right? And like, it doesn't exactly sound like he would be like, if I was his kid, I don't think he would like be recommending that business to me. Like, it doesn't sound like he's like, yeah, that's a great idea. Like the way Cody Sanchez makes it seem. Like, and I'm not I started to say I'm not afraid of hard work. As I get older, I don't want hard work. I want passive income. Maybe I'm fine just putting any extra money I have into a high yield savings account and earning my I'm earning almost $100 a month now in interest. That's gonna go down. Oh, dang it. I wanted to talk to you guys about so much more. All right. Okay, if Debbie makes it to the end, we're going to talk about the top 5 movie or the top movies. We're just going to totally switch gears now from all of this. I think we've had a really good video today. But you guys, I do encourage you, just look at this property on Redfin on your own, where you can like make the picture bigger. Look at those sandbags. It's kind of wild for that area. But Deadline, box office movie grosses. You guys, these headlines are not good. They're not good. Come on, where'd this go? Did it not go? Okay. This is rough, you guys. This is the headline for movies, which is, that's my day job. Please go see a movie. Okay, Pinky. I right now I'm using 2. I'm using Robinhood Gold, which I'm not going to recommend because there's a $5 monthly fee. So I'm not going to recommend that for most people. American Express has a good high yield savings account. Let me tell you right now what that interest rate is. And I'm saving money for taxes and for a trip. I have about $25,000 in that account right now. I'm not going to, but that's what's there right now. Okay, American Express, their interest rate is 3.7%, and that's not bad right now. I know Joel has Ally Bank, and they're normally pretty good. Steve says on the laundromat, Steve, I'm really enjoying your contribution today, so thank you for joining today. I hope you, I go live every Sunday at 11 a.m. Sometimes I babble, sometimes I stay pretty focused, but I have enjoyed your dialogue in here, so I hope you join us next Sunday at 11 a.m. If you can't do some basic repairs on the machines, you'll have limited profits. But here's the thing, right? And this is maybe where I get into trouble, though. On YouTube, you can learn anything. And I have an acquaintance. They run a channel called Washer Dryer Money, and he literally shows you how to repair them. So, but I've definitely gotten myself into trouble being like, I can just YouTube it and figure it out. And again, this is the hard work, right? At 47, 48 in July of this year, I don't know if I want to be down around like doing those repairs. I not afraid of hard work. I've done it my whole life. That's how I got to buy a house on a little like theater managers. We don't make a ton of money. I recently ran into my old district manager, and he says he uses me as an example of like what, is achievable. And I do believe in the American dream. And I do believe that you can buy a house. I believe it's hard. I don't believe it's going to be a good house. It might be a house that's about to crumble off the cliff and into the, canyon where you can't bring your couch up. It could be a house like mine with a flat roof that's hard to insure, but I've done it, and I still believe it's possible. Anyway, okay, the movies, which is what has got me to homeownership. This is not a great headline, right? Movies have really just been struggling since after the pandemic. So if it's in your budget, Tuesdays, most theater chains have discount prices on Tuesdays. Try and go see a movie this Tuesday, you guys. Novocaine, with 8 million plus, leads lowest grossing weekend of 2005. This is for Debbie. It's my little green guy, she calls him Baby Yoda. He's sad this week. I don't know how to been this well. Leads lowest grossing weekend of 2025 to date. Sunday box office update. Who knew that the movie's controversy would be saying that? However, the industry should be thankful. If Snow White pulls off a $50 million plus weekend next weekend, that's a respectable bump for what is a barren desert of business right now. Current estimates show that this weekend is in fact the lowest grossing at the domestic box office year to date, with around $54.7 million for all films, lower than Super Bowl weekend. How is that possible during spring break with kids off? Okay, so they're saying that like Snow White should be good, but it's saying that if it could have moved up to this weekend, we would have had counter programming. But anyway, it's hard to get people to go to the movies, even if it's a novel movie, when there isn't momentum to go. As such, the B Cinema score, 84% positive. Definite recommend Paramount movie. Novocaine is leading. Novocaine. Does it say what the rest of the movies are? 5 new movies are on the marquee. There isn't a pandemic or a winter storm to blame for the lack of traffic this weekend. Exhibition screams at studios for more product because they need it, but clearly it's a matter of quality over quantity. Better to have one big tentpole than a studio spent on than a handful of films they didn't. I'm told by Paramount and Focus Features, the latter, which has the high gloss Steven Soderbergh movie Black Bag, which is performing to tracking with 7.5 million. Marketing, all I have to say is that everyone knows their own numbers and knows whether they're slashing costs so that they're not throwing good money after bad. But if theatrical is being used just as an advertising vehicle to get to the home window, well, shame on you. These bad habits will kill the business. Straighten up and fly right. This is what Deadline's saying, but again, this is just not a great article. Here's why I love going to the movies. Okay, so Novocaine and then maybe Black Bag. I don't even want to read the rest of this article because it's sad. Does it say what other movies are in the top 5? It doesn't. So try and go see a movie if you can. The reason why I personally love seeing a movie in a theater is I now get distracted at home. At home, if I'm watching a movie, I'm more likely to like pick up my phone and be like, oh, who called me? What happened here? What happened there? Whereas when I'm in a movie theater, I can just enjoy it in peace and I'm not tempted to look at my phone, because that's like the ultimate movie going no is to take out your phone, even if you're just checking the time, even if you got an emergency text. Please go out to the hallway to check your phones if you're at the movies. But that's why I love going, because I know I'm not going to be tempted to, well, I might be tempted to look at my phone, but I am not going to pull it out in a movie theater. All right, you guys. I really enjoyed talking with you guys today. I hope to see you next week where we'll chat more. Let me know in the comments below or in the chat what you might want to talk about next week. I'm happy to kind of tailor the topics to anything you guys want to talk about. I will read 2 last comments before I head out for the day. The Pinky says the American dream, in my opinion, is simply being able to dream. The dream itself depends on the individual. Yes, that is absolutely true as well. I did dream of home ownership, though. I am not gonna, lie about that. I grew up in a trailer with my mom. It was my grandma's trailer because we couldn't even really afford our own trailer. I wanted to own my own home and I wanted stability, right? I wanted to own it one day and not have house payments, but I'm still going to have insurance payments that might not even pay in case something goes wrong with the house. And there's also still property taxes that are going to go up. And Joy and Joey is reminding everybody to please like the video. So thank you so much. And then Steve also says that Facebook has a commercial washer dryer repair and used machine sites. I will say this, maybe I'll just, there's always so many things that I want to talk to you guys about. I'm planning a trip and I want to try and do it on points, and I'm not having much luck with that. So maybe that's what we'll do next week, is I'll try and take you through that stupid process and see if we make any progress. But that's not my specialty. But you guys know I love a deal and I don't love spending money, and I love trying to save and make more money. And I do have some points, but apparently they're not going to be enough. But like we'll look into it and see if we can figure that out together. Maybe that's what we'll talk about next week. I need to go to the gym more. So I have done that, but I need to schedule some time there so that I actually go. Dang it, what was on here that I was going to talk about? I don't know. I lost my train of thought. Anyway, I guess we'll see you next week. I need to rewind my own video to see what I was just talking about. Oh, maybe I was talking about the Facebook commercial washer. No, that's not what I was going to talk about. What the heck was I going to say? I don't know. On that, I'm going to have to leave you guys. Thank you guys so much for watching Shelly's Millions. I'll see you next time.